Coming up today, Tesla stock soars 22% for its best day in over a decade. Why I think this could be the start of a massive bull run. The bears suffer record losses. More trouble for Apple. Why I'm a Perma Bull. The identity of the whale placing huge bets on the election. And the latest stock picks from billionaire Bill Gross. It's a massive day, guys. Let's go. And welcome back, everybody, to the daily market review on this huge day in the markets for Tesla. But before I get into that, stick with me today because I'm going to let you know what billionaire Bill Gross's latest stock picks are. We're going to take a look at the election odds and the identity of a whale who's been placing huge bets on the election. Plus, I'll give you my take on what it means to be a perma bull. But first off, let me just show you all the amazing things that Tesla is achieving, why I think this could be the start of a massive bull run for Tesla stock. So we finished up just under 22% today on massive volume. In fact, it was his biggest market cap gain in its history, added over 150 billion to its market cap today. It was also its second best day in terms of percentage gain since its 2010 IPO. And it's also been reported that this is a record day for losses for Tesla bears, as unbelievably, it's still the most shorted stock in terms of the value of short interest, almost $20 billion betting against Tesla, right up there with ExxonMobil and Chevron. So no doubt the bears took it on the chin today, as they pretty much have done ever since it IPO'd 14 years ago, currently up 17,000% since then. And so there's a few reasons why we got that big pop today, which I'll get into and show you all the numbers soon. But like I told you guys last week, why I was buying the dip after the robo-taxi presentation and adding more shares to my long-term position is because, like I said back then, I don't think the market was fully appreciating the potential for Tesla and how well they're already performing in the given tough environment. I think they've done a great result expanding their margins in what has been a really tough environment for EV makers of late. And so that's why I bought the dip. And like I told you guys earlier this week, if it kept on dipping, I had some buy orders ready to go. And stick with me because I'll come back and show you a long-term monthly chart and a pattern I've noticed in Tesla stock ever since it IPO'd. But first, just looking at this quarter, bit of a bird's eye view of their income statement. So a bit over 25 billion in revenue, 20 of that coming from their auto business. And contrary to popular belief amongst the bears, only a very small portion coming from regulatory credits, less than 1 billion. And what's really been lighting up for Tesla is their energy generation and storage business, something we've been talking about for a little while here. Up 52% year over year. Service has grown really well as well, up almost 30% year over year, giving them very healthy margins. And that's what's truly been most impressive with this earnings report, as the narrative out there was declining margins, declining profitability. However, once again, they flipped that narrative on its head, and here's a look at Tesla's non-auto gross profits. Just growing leaps and bounds here as their energy and services businesses accelerate to the upside, as are their margins, as the auto business unbelievably back to 20% gross margins, head and shoulders above the industry. Services making a brand new all-time high, just like their energy business. Huge 30% gross profit margin. And so the fact is their energy business is on fire, and energy storage deployments are set to more than double by the end of 2024. And I just can't see how this is going to slow down. Big companies and governments around the world are getting these energy storage systems, and Tesla can keep making money off servicing them, upgrading them for decades to come. What's also unbelievable, Cybertruck already profitable in less than 12 months. It's unbelievable how efficient this company is, even though you could still call it the early days of the electrification of automobiles. Elon also said they've got ridiculous demand for the Tesla Semi, another often overlooked product of theirs. Balance sheet's really healthy as well, exploding cash, reducing debt. That's really what they've been able to achieve ever since 2020 when the stock took off. Been able to do a lot of secondary offerings, raise cash, strengthen their balance sheet, give them really strong liquidity. And that's what Elon Musk has done a great job at, attracting investors, keeping a premium valuation of his stock, allowing them to raise capital at a high valuation. So a lot of the bears say Elon's making these big promises. This one technical thing he said 7 years ago didn't happen. You can understand he's doing his job as a CEO and keeping his stock trading at a premium valuation. That's a strength that allows them to raise capital and really fortifies their balance sheet, which they've done here. And like I said, he is the master of efficiency. Just looking at their worldwide cost of goods sold for the Model 3 and Y, absolutely nosedived over the last 4 years. From 41,000 to down below 32,000. The trend looks to keep going lower. We also heard other good things. FSD revenue hit 325 million this quarter at 90% margins. The ride-hailing platform launching in select states next year, the new cheaper model production next year, and they're in a big GPU build-out, getting massive compute power with one of the biggest GPU farms in the world. And once again, he's promising big. Unbelievably, he's guiding 25% auto growth next year. They might be able to sell 2 million EVs next year. Also going to start producing cybercabs at scale. FSD USD expected to be safer than a human Q2, Q3 next year. And if he can pull off what he said, that the cybercab is going to cost $25,000, he's absolutely going to wipe the floor clean with this industry and dominate, in my opinion. Plus, this is on top of the huge potential of the Tesla Optimus bot, which Elon said could actually be the biggest product and category line in the years coming. I'm also looking forward to the SpaceX IPO, hopefully in the next couple of years. I plan to buy shares on that. However, even with all these remarkable achievements, advancing humanity, getting us more towards a cleaner, more safer future, the bears are still as loud as ever, as they pretty much have been ever since he IPO'd 14 years ago. And not just talking about retail traders either, just like I showed you. Hedge funds have been shorting the crap out of it. Even one of the most richest men in the world, Bill Gates, has been reported to be shorting Tesla stock over the last couple of years, which Elon vowed he would be obliterated. You got to understand with Elon, the more people that doubt him, the more driven he becomes to prove them wrong, which he's done a pretty good job so far. Then we heard Bill Gates push back last year. Elon became super mean to him. Maybe if he wasn't such a huge hypocrite trying to educate us all on carbon emissions while flying around in private jets all day, at the same time shorting the #1 clean energy company in the world, we might actually believe half the garbage that comes out of his mouth. But at the end of the day, with the bears, I don't think it comes down to a detailed analysis of Tesla and they think it's going to zero. I think it pretty much just comes down to jealousy. Guys like this are threatened by Elon, and so they want to help knock him down and even try and profit from knocking him down as well. Because like I said, the stuff he says, like promoting global health and being a huge shareholder in McDonald's, Coca-Cola in Mexico, where they just load it up with sugar, way more than Western countries, he profits from all this crap while saying a completely different thing. And at the end of the day, you should believe people's actions and not the crap that comes out of their mouth. But anyway, I'm pretty sure it's always going to be like that. Like I said, I wouldn't be surprised if I'm sitting here in 15 years, Tesla's at $10,000 a share, and the bears are still whinging and crying about some little technicality. But just looking at a long-term logarithmic monthly chart of Tesla, we can see a distinct pattern in the stock price. Ever since it IPO'd in June 2010, did a bit of a box move, and then an advance period, straight into another box move, and this was a long one. This is when Tesla, or the Tesla bears, were really banging their chest. Now, Tesla's going to go down to a penny stock. That's where they got the Q from. When a stock trades over the counter, they were convinced it was going to zero, but no, we went into another big advance. And this is when Tesla went cash flow positive, started making money, COVID liquidity boom, and I think it was just catching up for years of underperforming because revenues were still growing in this time as well. It was really cheap down there in late 2019. I remember it was only about a 40 billion market cap. However, here we are now again, and looks like we're in another box period. And who knows, it could go on for a few more months, maybe another year or so before we test those all-time highs at about $400 a share. However, I wouldn't be surprised if this pattern keeps playing out once again. And that's why I think with all the exciting stuff they've got on the horizon, the momentum they've got in their current business units, increasing margins again, and just that added fuel from so many people doubting them, trying to short them, I'm very confident that this thing's going to eventually break out. And I'm sticking with my forecast. Tesla will be a 10 trillion plus market cap company by 2040, implying about an average compounded growth rate around 20%. And so, like I said, a lot of people think of Tesla as an EV company, but like Dan Ives says, you should be thinking of them as an AI and robotics company because that's the future. EVs are just part of it. Looking at other billionaire hedge fund managers and what they're talking about lately, David Einhorn says buying HP stock is a cheap way to get in the AI craze. He said HP will likely see high teens growth in the years ahead, currently trading around 10 times earning, which he thinks is very reasonable. HP is still big into PCs, which have been weak of late, and it's kind of hard to see PCs exploding again. I mean, they'll always be there. But whether it can go like some other new product categories out there, 20, 30, 40% year-over-year growth, I mean, it's highly doubtful. In my eyes, kind of just like a modern-day cigar butt, as Warren Buffett used to refer to. May have one or two more puffs left in it. Valuation, not too bad. However, I consider stocks like this more like kind of dinosaurs. They'll still be around for a long time. However, they really don't excite me. And there's a whole new breed of AI stocks that are really stealing the spotlight from those old dinosaurs. Companies like ServiceNow, gapping up today on their earnings, beating Wall Street expectations. They offer a digital platform for businesses, allowing for workflow automation. They're big into AI, machine learning, and just looking at the price action on this chart, that's where the market's at. These cloud AI businesses just have really good business characteristics, and they're just growing at lightning speed. Look at that revenue chart of this company, just up and to the right. Once again, the market loving it today, up 5%. Brand new all-time highs. Also got good news from the continued deleveraging from Taiwan. Just getting news that Taiwan Semi and their chip yield at their Arizona fabrication plant has surpassed yields at their Taiwan plant. The news is seen as a major win for US domestic chip manufacturing push as they seek to diversify out of Taiwan. And so this is a very important company in the world. And I think they'll be up there with the top dogs within 5-10 years because they still haven't even hit a trillion yet. 858 billion, biggest chip manufacturer in the world, and they're diversifying out of Taiwan, becoming a global chip manufacturer, closely aligning with the Americans, who they're very important to because this is where a lot of big American tech companies get their chips from. And there's a look at Nvidia, just sitting below all-time highs, pulling back a little bit, still holding up there. And next week will be the big one, Q3 earnings, mega cap tech, getting into the thick of it. There's the results from yesterday, green across the board, all except Boeing, which is a dog of a stock. And then just looking here today, mostly green, a few misses, Union Pacific, a few other old school stocks. We get more into the modern day stuff next week and the week after that. And so this time next week, we'll get a look at Apple's latest earning. How's the iPhone 16 going? How's the Vision Pro going? Because we're just hearing reports today, they could be pumping the brakes on Vision Pro production, possibly halting it by the end of the year. As one analyst said, the demand for the $3,500 device has been weak and that they may be already developing a cheaper, smaller headset to boost consumer interest. And I mean, it's kind of a niche product. It's not really a mainstream price, $3,500. That's why I like Meta's VR Quest better, priced at a fraction of that, under $500, which I think is where you need to be for the mainstream. Still doubts on it as well. People reporting sore eyes, sore necks. So still early days in this technology, virtual reality. But I'm more inclined to bet on Meta with this, especially with the metaverse, and the Zuck seems determined to beat Apple on this. He hates that Apple's already got leverage over them with all their apps operating on their devices, so he wants to own the hardware for the VR technology. And there's a look at Apple. It too just hovering below all-time highs, doing a lot better over the last couple of years. Meta just pulling back to its 50-day after hitting an all-time high 2 weeks ago. Okay, so I thought today I would just quickly cover a topic and kind of just give my definition of it. So I do consider myself a Perma Bull, and I think that often gets misconstrued, misinterpreted, and people just think that means I think stocks are just going to go up every single month and year forever into eternity. When in fact, that's not how I think about it. It's more in line with what this article says here. The risk is in not taking a risk. In my mind, being out of the market, being in cash is way more risky than being in the market. Nobody can time the top. And when you're in cash, you're fighting inflation. And so I just asked ChatGPT, what's the definition meaning of the terms perma bull and perma bear on Wall Street? So a perma bull is someone who is constantly optimistic about the stock market's future, believing that stock prices will continue to rise over time, even during downturns or corrections. That's the belief that the market will recover. They have a positive, long-term outlook and generally advocate for buying and holding stocks, expecting continued growth. Perma bulls believe in the overall upward trajectory of markets fueled by factors like technological innovation, economic growth, or central bank policy. For example, a perma bull might continue to invest in the market even during recessions, expecting a recovery and new highs. That's pretty much exactly how I think of a perma bull and how I think of myself as well. I'm constantly invested. I just look to ride out the corrections, dips, recessions, bear markets through diversification. It's not that I don't think the market can't go down or we won't have a bear market or we won't have a recession. Very well could be the case next year. However, it doesn't mean I'm going to freak out, get out of the market. I'm going to continue to buy stocks, stay diversified, and just ride out the dip. And in fact, even during bear markets, and I'll show you this over the coming days on these videos, there's still stocks and sectors that rise. There's always a bull market somewhere. So that's our job as investors, is to find what's working. On the other hand, a perma bear is someone who is constantly pessimistic about the stock market, believing it is overvalued or prone to crash. They expect the market to decline or collapse and often advocate for more conservative investment strategies, such as holding cash or short selling stock. Perma bears focus on risks and threats to economic growth, such as high debt levels, inflation, geopolitical risks, and tend to issue frequent warnings about market bubble. For example, a perma bear might avoid investing in stocks or frequently predict an imminent market crash, even during long bull markets, and that has pretty much hit the nail on the head. I think there's an epidemic online of perma bears because there's just a flood of content constantly brainwashing you on valuations, the threats, the risk, because all those content creators know that's what gets them more views, gets them more clicks, because it plays on the psychological instinct of humans to be more alert to threats and risks than to opportunity. And I know that for sure by testing that myself in YouTube videos. Kind of like a car accident on a highway. Everybody slows down to take a look. And so me being bullish and focusing on opportunities, my videos don't get nowhere near the same amount of views and clicks, as opposed to if I was to come out and say, market crash imminent, look out, watch out, because I just can't do that. I don't want to fill your heads with fear. I want to be honest and truthful and trying to help you guys focus on the opportunities as well. But regardless of market analysis, facts, what actually works, all billionaires and investors pretty much being being Perma Bulls, optimistic, like what they see about the future. It pretty much just comes down to personality and whether you see the glass as being half full or half empty. And so a realist would tell you it's both half full and half empty. An optimist would say it's half full and a pessimist would say it's half empty. And so I believe in business, investing, in life, everything's better when you have a positive mindset and you look for the good and you look for what's working. And I guess that just carries over to my investing. And this is nothing new for me. It's not like I've just gone uber bullish on the stock market. I've always been fully invested and I would never be completely out of the market or short the market in any meaningful way. So anyway, I just wanted to clear that up and give you guys my definition of what it means to me to be a perma bull. And that's basically just an optimistic, always invested mindset. And like I said, it doesn't mean I don't think the market's never going to have a bear market again or recession. Of course it will. It's just that nobody knows when. And that's why, in my opinion, it always pays to stay fully invested and protect your wealth and purchasing power from the negative effects of inflation, for which we have a lot at this point in time. And just moving over to the election as we approach this important date, there's a look at the latest odds. Looks to be a lock now. Massive event in these prediction markets. 2.4 billion wagered here. And we're just getting the identity of what we reported a couple of weeks ago. Huge whale bets that really kind of blew out the odds. Actually a French national with extensive trading experience. He's got 4 polymarket accounts and he bet more than 40 million on a red win. Polymarket found no evidence of market manipulation, as was widely reported back then. It's just one French trader dude who's got a huge conviction on who the winner's going to be, but they did speak to him and that he had agreed not to open any further accounts without notice, but his betting is pretty much in line with how financial markets are pricing the outcome as well. However, I think this is the biggest risk for the here and now in the stock market, is if it's not a clean election, it's not a clean result, especially in the swing states. You really want to pay attention to Pennsylvania, as whoever wins that is likely to win the whole thing. And so if they can't decide a winner by midnight and we're getting reports of some other funny business, you're going to see Bitcoin and S&P futures take a nosedive because the market's pretty much already priced it in who's won. And that's when you get big moves in markets. When what's been priced in and what happens are two different things, you're going to get a lot of volatility, big gap down the next day, and we'll really have to cross that bridge when we get there if that were to happen. So that could give us a quick 10% pullback in the market. And for the here and now, that's what I think the biggest risk is. And so do option dealers too, in my opinion. That's why they're still asking a hefty volatility risk premium. They have to account for that possibility. Still asking 9.8 points above realized. And we've still got bond market volatility up there and oil market volatility just pulling back a bit, but still relatively elevated as well. So market's still on edge a little bit here, even though the actual market's moving around on low volatility, currently tracking annualized rate 9.2%. Like I said, I wouldn't be surprised if we get a little rug pull before the election, shake out the weak hands, maybe a bit of a buy the dip, and the market might get a little nervous and just wait for the election, similar to that pattern in Tesla. It's kind of confident, but it just wants to see what's going to happen. And then maybe we get a relief rally with a red win. However, if we get a surprise blue win, I'd say we'd be doing something like this. Same with Bitcoin as well. May find its direction after the election and could get the dollar moving as well. I think this has been pricing in a red win. Same with bond yields, industrial stocks, a whole bunch of others as well. All around the world, this is having knock-on effects. Even emerging markets pulling back. Stocks on the other side of the world starting to price in what a new government could mean for them. Potentially tariffs, stronger dollar. It's not good for emerging countries. Out for the here and now going into it, we just got PMIs coming in slightly better than expected. New home sales above expectations. Housing market's still weak though. And Goldman Sachs boosting their Q3 GDP tracking to 3.2%. Pretty healthy growth for the US economy. We also just got in daily credit card spending per household. Latest data shows almost 2% year over year growth. Gas coming down, which is a really good setup. We've got some bump ups in clothing, department store, general merchandise. Consumers are still out there in spending. We could be on the cusp of a record holiday spending period as well, especially online. And all this growth while inflation's still coming down, allowing for a global monetary easing. ECB says they could be looking at a jumbo cut, just like the Fed did 50. Bank of Canada just did 50. Maybe they want to join in on the party and let's all do a 50 basis point cut. Why not? And with that bump up in the dollar, the Japanese yen weaken again, now hovering near a 3-month low. How quickly everyone forgot about the yen carry trade blowing up. Wasn't that supposed to cause a big black swan? Not quite. The whole global financial system doesn't run on top of the yen carry trade. However, we do have the Bank of Japan governor coming out today, said the next rate hike keeps him awake 24/7. Not a real good sound because he knows how much of a dicey spot they are in. If inflation comes back, they simply can't afford higher rates. They've got more debt to GDP than the States. Say he's just trying to hint that to the market to not let the yen weaken so much again. How with US bond yields starting to price in economic growth, potential return of inflation, that's just strengthening the US dollar against the yen and other currencies. Holding up well in the face of that is Bitcoin, gold, and silver, showing you their relative strength in the face of a strengthening dollar. And now we're getting a little bit of a changing tune from some Fed members. Now saying they've got more work to do on inflation. What's that all about? Didn't they just cut 50 basis points? Now they're talking about inflation already? And wouldn't that just flip the narrative and markets? They actually had to start jacking rates again next year. Maybe they start getting more concerned about inflation with the change of government. But like I said, a change in government could unlock even further growth from the US economy and all its innovation and lead in technologies. I think it surprised a lot of people to know almost half the S&P 500 is currently under antitrust scrutiny from the government. And so one of the reasons America has excelled so much, especially over Europe this last 20 years, is more easier to do business in America, more easier to raise capital, distribute that capital, find investors, looser regulations, lower taxes. And if it were to go that other direction, well, just like it's been proven in history 1,000 times, more tax, more regulation, squashes innovation, squashes growth, in the end to the detriment of everybody. I'm also expecting the Russian-Ukraine war to be negotiated away as well. We just heard today, Putin welcomes Trump's stance on ending the Ukraine conflict. And so just like last time, he sought to quell tensions with all the world's superpowers, which he did, brokered peace deals in the Middle East, met with the North Korean leader, first time US president did that, and was actually the first US president in history to not start any wars, as was widely expected back then. We were going to get World War III, which the people that accused him of that are actually pushing us more towards. And I think he might be able to negotiate a deal with China as well over Taiwan. Might surprise a lot of people. Because I really think Xi Jinping and this guy here, they don't want to fight each other, they don't want war. They just want to compete with each other on business the way it should be. But obviously that'll upset a lot of people because the flow of weapons and money overseas will dry up. Anyway, that's just my opinion. You're free to disagree with me. Just moving over to billionaire Bill Gross and his latest research he just posted on his website. Somebody stop me. For nearly 2 years, I've been recommending master limited partnerships as an attractive energy play with high yields and upside price potential, which he just said on X. He's been trolled a lot over, but the trade's been working out pretty well. Now, of course, this is not financial advice. MLPs are not for everybody. I actually don't invest in any LPs limited partnerships myself. They're a bit more complex. And for foreign investors, they can come with extra taxation. However, I thought it'd be interesting to share his list today with you guys. WES, PAA, ET, EPD, HESM, MPLX. Says he's got 30% of his portfolio in these stocks. And there's a look at a long-term monthly chart at some of these stocks he's talking about here today. There's Western Midstream Partners, over 9% dividend yield. There's PAA, ET, and EPD. Similar price charts to them all. Kind of like mortgage-backed securities. A lot of financial stocks still beaten down, having a lost decade. Former billionaire Bond King, he likes them. They got high yields. That's why he's got a third of his portfolio in these stocks. And technically speaking, they do look to be in solid uptrends here. As always, please do your own research to decide whether any investment is suitable for yourself. And there's a look at the 10-year yield today, still hovering up here at 420. Keep in mind, economic data we get over the coming weeks is going to be skewed from the fallout of strikes and hurricanes in the States. So we may be getting a couple of misprints, but I think the market pretty much already expecting that. And like I said, we're just kind of trading flat here. Maybe actually just calling up a bit for a little bit of a rug pull before the election. Because in my opinion, it's just too good an opportunity for the market to shake out. So it would surprise me if we just mowed it up right into the election with the market not getting nervous or jittery at all. But like I said, what's telling me we could get a little rug pull is option dealers. Still pricing in the possibility for that. And they're usually right. And that rug pull would prove them right. And I'm pretty sure VRP would dive right back down afterwards, along with a bit of a buy the dip action. That pretty much wraps it up for the daily market review today. And just wanted to give a huge thanks to everybody who's filled out the survey and expressing your opinion and feedback on how I can make the daily market review better for you. I really do appreciate your time you've taken to complete the survey. And if anybody else wants to express their opinion, just click the link below this video. Head on over to clickcapital.io/survey. It's completely anonymous. You don't have to enter your name or email, and I'll be taking this down in a couple of days. And as soon as you submit the survey, you'll be automatically redirected to my latest report, 10 stocks to watch in 2025. So these are some of the most exciting small cap growth stocks I've got on my watch list. In fact, one of them is already in my portfolio. These are stocks I'll be talking about on the channel in the coming weeks and months. Really exciting stuff. And this is the first one, Rocket Lab. So if you'd like to find out what all these top 10 stocks are that I'm watching, along with what I think makes them unique and my bullish thesis on each, then click the link below this video and take 5 to 10 minutes of your time just to fill out this quick anonymous survey, and you can get straight into that report, and you'll also be doing me a huge favor. So thanks everybody who's helped me out with that. I really do appreciate it. Other than that, I'll see you back here this time tomorrow. Cheers.